Hello and welcome back to the MedSpa Growth and Profitability Show. Today we have Clint Bundy on, and I've been getting messages from my clients, from people that are just chatting in on our website asking, I think I want to sell my practice, but I don't know if I'm ready to sell or I don't know what my valuation is. So I wanted Clint to come on today to really get into what you need to know about selling your practice and how to set yourself up for success. Even if you're not thinking about selling right now, what you need to do if you want to sell at some point in the future. So welcome, Clint.
Hey, April, thanks for having me on today.
My pleasure. When our good friend Porter introduced us and we sat down for that first meeting, I knew you were somebody that I definitely had to have on. You guys know I only want the experts in the space. I don't want somebody that's dipping their toes in the water that I bring on to introduce to my audience. So Clint is, actually, I don't know your position at the Bundy Group. Are you CEO?
Yeah, we use the term managing director, which is a senior professional within an investment bank.
Perfect. So he is the managing director of the Bundy Group. And Clint, why don't you tell us a little bit about the Bundy Group?
Yeah, and again, April, thanks for having me on. I have a ton of respect for you and the organization you run. And as one industry specialist to another, it's a pleasure to be on today. But yeah, just at a real high level, our firm is what we refer to as a boutique investment bank. So what we do is we specialize in representing business and practice owners, usually in one of two events, either a business sale or a capital raise event. And so a business sale could be a practice owner who says, I want to sell 100% of my company and head out the door, or it could be an owner who says, I love what I do and I want to help see further growth, but I need a partner to help me accomplish that. And so we help bring on buyers or investment groups, also known as financial sponsors, to accomplish that goal. And so we work nationally. And of course, as we're on the topic today, we are certainly an industry specialist within the aesthetic space.
I know everybody that just listened, they might have been tuning out at the beginning where we were talking about selling, but then when you brought on, maybe they need a little bit of a capital raise or an investment partner, everybody else just got re-engaged. So can you tell us how you're not just dipping your toe in the aesthetic space, how you decided to go into the aesthetic space and how you work in there?
Yeah, I'll keep a long story short. We'd always had in our 30 plus year background as a firm, a background in healthcare. So we have known the healthcare space extremely well. And about a decade ago, we got active into the dermatology sector. In a manner of speaking, that was an outgrowth of our work in the healthcare space. And so through our work in dermatology, we actually began to get introductions to cosmetic-driven dermatology practices, which then began to feed into more aesthetically driven practices such as medical spas. And so certainly it can be a whole lot more we can unpack about what's going on in the med spa and aesthetic space today, but we consider ourselves really a decade plus expert within this arena.
Perfect. And I guess at a very high level view, when should a practice start thinking about selling?
Yeah,
or I shouldn't even say selling, planning that exit, which hopefully is the sale, but eventually leaving that practice.
Sure. Great questions, which by the way, that's a question that every owner, regardless if they're just starting a business or if they're in the middle of their life cycle of owning a business or they're actually getting close to thinking about an exit, they should always be thinking on this topic. So I'm glad you're bringing it up and addressing it.
100%.
And what I would say is the same comments will be true for a group that might be thinking of bringing on growth capital. Is my theme that I give to business owners when I do speaking engagements and I'm writing articles and on podcasts like these is business is oftentimes an owner's most valuable asset that they have. They need to treat it as such. No different than if you're buying a stock or if you're buying a house. You need to treat this asset that you have seriously, which of course most owners, if not all, do, and you need to nurture it because for it to grow in value, which we all want our assets to grow, you need to be nurturing it over time. And so from our standpoint, it's never too early to start thinking on the topic of building value, even if you may never have plans on selling or exiting. So we always say from the moment you start your business or buy it, start thinking about the exit and building value.
Absolutely. And that's also what we teach our consulting clients too, because a lot of times people come to us when they are a doctor that just opened a practice and they're still wearing all the hats in the business. They have a team that's doing great, but if somebody leaves, there's no systems in place. They're really stuck and trying to fill that position. If the owner's taken out of the business, nobody knows what to do. So we really want to put those systems and procedures in place. And that's part of that building value and building yourself up, not only to open multiple locations, but sell at one point as well. And another thing that we love, and you can let me know your thoughts on this, is creating some kind of a recurring revenue. So whether it's a membership or whether it's an auto ship on their skincare products or whatever, having that recurring revenue definitely boosts up the value of the practice. Can you talk a little bit about that?
Yeah, great. Good. Boy, that's a topic that's near and dear to my heart. So I'm glad you brought that up. Just to give you a frame of reference, when we're representing a client in a sale or capital raise, we are trying to focus on achieving two main objectives for the client. One is to help them maximize value in the sale or capital raise. And two is help them find the best fit. And so I always like to say we're in the story business. At the end of the day, we're there to tell the story on behalf of the client to achieve those two main objectives. And you just hit the nail on the head on one of what could be several key foundations to drive value in a sale. And that is, I put recurring revenue under what we call the stability kind of leg of the stool. We talk about our legs of the stool: stability, profitability, growth, and then oftentimes we'll throw in scale, which is size. And so recurring revenue, buyers, investors, they're very risk averse at the end of the day. And the less risky an investment is, the more they're willing to pay up in terms of value. And so when you bring up recurring revenue, that's a key theme because that reduces risk and gives us the ability to drive more value for the client in a sale.
Absolutely. And as you were talking about your key foundations, or did you call them foundations or pillars? I'm sorry.
It's funny. I call them all the above. A lot of times we refer to them as legs of the stool. We call them our four legs of the stool.
One of those important parts for me, and you let me know, is really the growth and that they're built to continue growing. So a lot of you guys that are just relying upon referrals and repeat clients, that's not, and again, Clint, correct me as we're going because I'm not in those shoes, but I don't feel that is as beneficial to the buyer if you don't have that guaranteed way that you're generating your leads and turning those leads into sales. Is a lot more attractive because they know that they can keep just putting money into a marketing funnel based on if the owner leaves the practice or their favorite leaves the practice, then they lose business and it's not that steady growth. Can you tell me a little bit about that?
Yeah, I agree with your comments and sentiments. Recurring revenue, which delivers that stability, it's a foundation, which if the recurring revenue is there, a buyer who at the end of the day is buying the future, when they pay an attractive valuation for an aesthetics or med spa practice, they're not buying the past, they're not buying the present, they're buying the future. If they see that recurring revenue stream, then they know with a fairly high degree of certainty that revenue is going to be there tomorrow, next year, the following year. So you want to use the recurring revenue as a basis, but then also in my third leg of the stool being the growth, if you could say, look, you've already got this foundation of recurring revenue here. And by the way, we can show through projection models and past growth plus our detailed projections of the future, which is an aside, we spend a lot of time when we're engaged by a client working with them on these projection models. We can show this growth for the future. Then a buyer now can say, okay, well, if they're going to force me to pay a premium for this business, at least I know I can justify it because it'll grow and I'll still be able to get my returns as a buyer because of that future growth.
Perfect. Thank you. And I know you were talking a little bit about what the buyers are looking for in that acquisition. And what do you think can help build additional value?
There are a lot of the broader things as well as more minute details, which are still important that a practice owner can focus on. Certainly, and I'm sure this is a topic you address a lot with your clients, the people in the business and the culture. it's a services industry. So you've got to have great people and you've got to have a great culture who are delivering quality services to a patient base that's usually very particular. So we feel like having the right people and culture and hopefully not showing a lot of turnover within an organization certainly is an attribute. You want to make sure you're providing services that do drive that recurring revenue theme and that growth-oriented theme. You want to make sure that your facility or facilities locations have been improved, that are attractive. Again, you're usually dealing with a patient base that has a certain set of standards. And so from our standpoint, we start with the focus on the stability, profitability, and growth. But then when we're giving advice, we focus on practice owners to get into those more sub-segments, which are still very critical.
Definitely makes sense. I'm throwing a little bit of a curveball here. With your experience, what percentage of sales have you seen where the owner left right when the sale was over? Or to the most part, do they want the owner to stay in the business for a while?
Yeah, great question. So much of that question and the answer to it depends on how involved is the owner in the practice. If the owner is generating 50 or 60% of the revenue of the practice, then in that situation, our usual advice is to the owner is you should expect to need to stay for a period of time, sign an employment agreement. So much of this is going to depend on who the buyer is that it ultimately wins in the competitive process. This is why we're fans of competitive processes, is because you can negotiate usually the best terms available to the owner, including on employment
You want options.
options. So it's difficult for me to say on a broad scale what that could be, whether it's 1 year or 3 years or what have you. But I would just say for a period of time, that certainly expect to stay for a period of time. But if you're generating a minimal amount of the revenue, or if you're just really serving on what I like to refer to as kind of a passive owner role or more of a chairman of the board kind of role, then it could be that you could walk out the door day after close and have no obligations.
Yeah. And for those of you guys watching and listening, if you are that owner that is very, very active in the day-to-day of the business, make sure you come to MedSpa GrowthCon so we can get you out of that day-to-day seat and get you really set up for success. So just put a little plug in there as we go. And Clint's going to be a speaker at that event as well. So Clint, we were talking about the different buyers. Can you explain the different buyer types?
Yeah, there are two, at a very high level, there are two main buyer types that we deal with. And that frankly today are really the what I would say the driving force in the M&A market for aesthetics and med spa practices. Those are what we call strategic buyers, and those are effectively operating platforms within the aesthetics and med spa space. They could be even dermatology groups that are requiring med spas. It could be plastic surgery groups that are growing med spas. But we put all of those underneath the strategic bucket. And then we also call the second group, we use the term financial sponsors, although many people will use the term private equity, which is fine. You can use either simultaneously, and we're referring to the same thing, which is financial sponsors are investment groups that are looking to invest or acquire privately held businesses and grow them over a period of time through both organic and then acquisitive means, and then turn around and resell them. Now, interestingly enough, many of the strategics today active in the aesthetics and med spa community are backed by financial sponsors. But if they're an active operating entity, we would still refer to that as a strategic and not a financial sponsor.
Makes sense. Do you see a lot of owner-operator to buy practices, or not so many?
You could argue as a third bucket of what we would use the term individual buyers. And yes, that is a legitimate pool of buyers that can be available out there to practices. And in some cases, that is the only option. I would say, and this digresses a little bit into what's happened in the med spa M&A market over the past 10 years, I would say there was a point in time that was really the only option for many med spa practices. But now you've seen the pendulum swing, and this is why a lot of your clients are probably getting a lot of phone calls today from buyers, is now you've got a really healthy and growing group of strategics and financial sponsors who are either in or trying to get into the aesthetic space, which is why our phone rings 2 or 3 times a week from groups saying, I want to get in the med spa space. I hear you're the guy to talk to. How do I get an opportunity?
And it's funny because our name, Med Spa Growth and Profitability, it has med spa in the name. Obviously, we're not a med spa, although I invest in a few med spas. I get emails and LinkedIn messages all the time asking if I want to sell my med spa. So definitely everybody watching, I'm sure, is getting bombarded. And again, you might have heard the term roll up by some of these investors. The other one is, and I'm going to say this wrong, but consortium.
Yeah, a consortium, and it's
consortium. Thank you.
Consortium, and it's a term that Bundy Group uses. Just to be candid with you, but I'll explain to you what that is if you don't mind. Which is,
please, yeah,
you're correct that platform equals a roll up or a consolidation strategy. Those are all the same. That's usually what most financial sponsors are doing today. What a consortium is doing is the same playbook, but instead of effectively the buyer, the investor getting the benefits, it's the practice owners getting the benefits in terms of what we like to call a value arbitrage. And so it's where practice owners, if you may have a med spa here and a med spa here and a med spa here, and they say, you know what, we're going to get together and usually hire the same investment banker who's going to represent us as a collective group, even though we're 3 separate businesses. We're going to present ourselves as being one potential platform, and we're going to push the pool of buyers to give us offers as if we're one group, which is generally in M&A, the larger a group is in terms of financial profile, locations, et cetera, the higher the valuation is. And so what that creates or results in a consortium is that the individual practice owners can get a higher valuation, and they get the arbitrage benefit and not the buyer getting the arbitrage benefit.
I love that so much, and I'm sure everybody else does. That's awesome. And so you might think that your practice is at a certain value, but when Clint puts a few different practices together, the value definitely can go up when we go to sell. So that's amazing. Now, for the most part, I'm sure you've seen a lot of crazy things happen right before you close all the documents. What are the 3 biggest challenges that hold up a deal?
We are big believers in preparation, and then competition. So if you're a practice owner and you're thinking about, you're starting to seriously think about a sale in the next 1 to 2 years, then you really need to start engaging with advisors as quickly and early as possible. I mean, April, hopefully they're leaning on you for advice in those situations. Certainly that's an appropriate time to begin conversations with someone like us who could run a sale process. We will also oftentimes recommend that sellers hire a transaction accounting firm to do what we like to refer to in our business as a quality of earnings report, which is effectively a kind of a financial audit, but with an M&A lens to it. And that helps to reduce the chances of a lower valuation or a deal falling apart due to numbers not being correct. So I would say, if you don't mind, I'm going to use your top 3 mistakes. Is top 1 and 2 is they're not prepared. And then the third one is they don't introduce competition. What we always try to make sure practice owners understand is that when a buyer approaches them, and that's great when it makes everybody feel good when you get the inbound, hey, I want to buy your business. But that buyer is not your friend. I mean, their goal is, yeah, they want to buy your business, but they want to buy your business on their terms, not your terms. If you don't have competition involved, then as one of my former clients used to say, if you got one buyer, you got no buyers. So those are the top 3.
Definitely. I love those. Those are great. And I'm all for competition and creating a little bit of a bidding war as well, hopefully. When they get those phone calls, and let's say somebody is interested in selling their practice, and it's okay, you know what, I could be interested. Hopefully they give you a call before then. But let's say they got this phone call. The numbers they're throwing out sound nice. But is that when they call the Bundy Group and where you could represent them versus just the buyer?
We get phone calls at all different phases from practice owners. In a perfect world, which there's never such thing as a perfect world, but in a perfect world, they will call us maybe 6, 12 months before they're actually starting to ramp up. But we absolutely, to your case study, we get those calls all the time, or introductions, which is, hey, I've been approached. They're asking me for financials. They want me to sign this. They want me to do that. And we absolutely can jump into those situations quickly to give advice. A lot of times our advice to a practice owner will be, hey, that's great news. You got approached. I think the first thing needs to be, we'll slow things down a little bit. The buyer's trying to speed it up to their benefit, but let's slow it down without.
And they're not going to go away, right? The buyer's still going to be there if you as much time as you want.
Yeah, that's right. They won't be. And the truth is most buyers actually they appreciate the fact and respect the fact that when an investment banker's brought in, when a transaction accounting firm's brought in, yeah, does that mean they're probably going to get forced to pay a little or a lot more? Yes. But in a lot of ways, it helps them get a deal done more quickly, and it helps them ensure that, hey, what we're buying here, it is what we thought it was. So it's a trade-off for them. Yeah, well, I'm gonna Bundy Group, we're gonna push that buyer to pay more, or it could be another buyer that we bring in a competitive process. But in return, they're gonna have more certainty on what they're buying.
I love that. Now, Clint, thank you so much for sharing all this information. I know we're going to have you on also one of our live streams in the next week or two. I forgot when the date is, so that I can't wait for that. And also you're going to be at MedSpa Growth Con. So Clint put together a great little survey. If you guys are wondering, is your practice ready to sell? Are you a little ways out? I want to know like the viability. Definitely go check it out. It's going to be at MedSpa Growth and Profitability /Bundy Group. And fill out that quiz and to see if your practice is ready to sell. And there'll also be a little check mark on the bottom if you want Clint to get in touch with you and just to see what your options are. In the meantime, Clint, can you tell everybody where they could find you if they want to get in touch before then?
Our firm's website is bundygroup.com. So certainly go there. My email address is Clint, CLINT, at Bundy, BUNDY, group, GROUP.com. And certainly, we're very responsive as a team. So if you reach out to us, our goal is to be back to you as quickly as possible. And we're always happy to provide evaluations and insights with no strings attached to anyone in the aesthetic space. We're a very relationship-driven organization.
Yeah, and you guys know that anybody that I introduce you to, I stand behind. So I wouldn't be introducing you to someone that's just going to try to make some money off you. Clint and the whole Bundy Group is there to help. So definitely reach out to him. Go ahead and take the survey. We'll put a link down in the show notes. And thank you guys for joining us. Thanks, Clint, for being on.
It was a pleasure. And I look forward to seeing you at the conference and doing the live stream as well.
Me too.